are joined this morning from San Francisco by Bloomberg Best. He's the Gleacher analyst, Brian Marshall, who was at Leo Apotheker's meeting yesterday. And Brian, you're keeping your rating for HP, but you've got a little bit more of an adjective to it. You say it's a screaming buy after hearing from Apotheker. Why do you say this?
Well, I think, Betty, if you look at it, the company is extremely undervalued. Obviously, you know, its closest competitor, IBM, is trading about a 12 times PE multiple. The S&P is around that as well. So HP down here at less than 8 times, I think, is a pretty unique opportunity. And it's my view that you know, that this won't last for long. And so I do think shares of HP are extremely attractive at current levels. Now,
you were quoted in the Journal, though, this morning, Brian, and in the Journal, you said that he performed well, though details were limited. So there's some room for pause there. What do you mean by that?
Well, basically, at the time of that quote to the Wall Street Journal, I think basically Leo had just wrapped up his overall presentation. It's a very big picture, high-level summary of what he plans to do with regards to connectivity and the cloud. Later throughout the day, we actually had some of his team leaders come up and give a more sort of in-depth look at the actual business plan put in place to become more competitive and attack the real growth market. So as the day progressed, we got some more details.
So what were the details that you were looking for that got answered?
Well, basically looking at how they're going to actually migrate from sort of the traditional stack, if you will, into a new cloud stack. And so clearly HP is the only company out there that has all the tools in the tool shed to attack kind of new cloud infrastructure architecture. And so hearing their presentation on how they want to go down that path, I think gave some comfort.
What do you make of them raising the dividend like this?
I think the dividend's a good move. You know, we now have about a 1.3% dividend yield. You know, obviously a 50% raise to 12 cents per quarter, up from 8 cents prior. But my view, I think the real key takeaway from the event was them giving longer-term guidance. This is something we've been calling for quite some time, and they're now talking about EPS guidance out to 2014, which is 4 years away. So we applaud that effort.
Did you find the guidance to be a bit conservative, though?
Yeah, I think, talking with Leo afterwards, he reiterated the word "at least" on numerous occasions. So I do think this is pretty conservative, and based upon my modeling assumptions, you can only have about 3% revenue growth over the next couple of years and easily get to that $7. So I do think that is a starting point.
One of the things Leo also said, and this is clearly where they're putting their cash into the dividend, not into acquisitions. He said basically that HP is not looking for any sort of transformative major acquisition like buying SAP or something like that. Is that what does that remove for you with the company?
Well, I think it removes some uncertainty. I mean, clearly people were worried about him potentially buying his the company that he just came from, SAP, but that clearly is not on the table. If you look, HP has actually been the most strategic in terms of M&A over the last couple of years. In fact, the last about 30 months, they've acquired about $25 billion worth of companies, more so than any other company out there in technology for that regard. So I think they're doing the right things. They've already acquired quite a bit. They're going to continue to do so in software and in particular, but he removed the uncertainty about a big transformative deal, and I think that helps investors have confidence with their financial models.
Right, that helped the stock then. Brian, thank you. Appreciate it.
Great,
Bloomberg
thanks.
Best, Brian Marshall.